First of all, if you've seen any videos that we've done, here is our disclaimer that we're required to show. A couple important things that the powers that be want us to make you aware of. Number one, we are not registered to give individual investment advice in the United States. And two, because we have a lot of international subscribers, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So those are the primary things. However, again, if you're seeing this perhaps for the first time, please take a screenshot of it, read it in detail in your leisure. From that, I'll go through and give you a quick rundown on how the insiders meeting works. We'll talk a little bit about the US market, and the market has done a lot, but not done anything since the last time we talked, which is interesting. So I'll go through a couple of things that I think are noteworthy on where the market is. Then we'll go through both of our portfolios, talk about the status of each of our alerts, and then at the very end, with whatever time's left, we'll go through and cover some general topics, Q&A. That usually amounts to you guys giving us your favorite stock symbols, and we take a look at what our charting technicals show for your favorite stocks. So with that, I'll move into how the questions work. Are you with us, John, from Australia?
Yes, Rob's still here. Just thought I'd let you know you're not sharing your screen, so we've got you full front and center, which is lovely to see. But
no, that is not good. We don't want that.
But while you're getting the slides up, I can just talk to how we ask questions. So there's two ways that you can ask Rob questions during the session. The first is if you look at the bottom of your Zoom software, you've got a little raise hand icon. And what that will allow you to do is signal to us that you have a voice question for Rob. And when we see that, we can put you through to Rob to ask your question. If you do us a favor and try and keep your questions relevant to the topic that he's been talking about at the time, that would be much appreciated. Alternatively, if you're more comfortable just typing a question, please go ahead and type them into the Q&A. So that's the Q&A distinct from the chat. And what we'll do there is we can then ask your questions to Rob for you. So that's it, Rob. I think that should be good. And thanks very much. It looks like we've sorted that out. I might just get everybody else to confirm that they're able to see your slides, if you wouldn't mind, in the into the chat. That'd be great. Yeah, it looks like it's all working well now, Rob. Thank you.
Okay, sounds good. All right, thanks, guys. All right, so taking a quick look at where the market is. I mentioned that the market has done a lot but gone nowhere since last week. Just kind of this back and forth. Seems like we're up big one day, down big another day. But there is a couple of interesting things I want to take a look at. First of all, we've noted the market has been in a churn for basically 2 months. And that's the worst case scenario for an options trader. Option traders want volatility, but we want directional volatility. We want the market to move somewhere, not go sideways. So when you go sideways, then you're just chewing up time decay, and that's nobody's friend when you're trading options. So you may wonder, well, there has to be some sort of a scenario to take advantage of that. What do? Well, the only way to take advantage of that is through selling options. And there's someone that was doing a system that I was aware of, I'm not going to mention any names, but they came up with put a credit spread up above, put a credit spread down below, 2 standard deviations away from where the market was. Remember our trend channels on the eBot. If you've been in the Zig-Zag class, you're very familiar with that we've been talking about, the Zig-Zag mastery class I'm referring to, which is the 1 standard deviation. So this is 2, so this is twice the average movement, figuring that in a month's time, the market isn't going to move that far. So basically you risk $9 to make $1. And the idea is that they're so far out of the money that they're both likely to expire worthless. But all you need is one bad one. In other words, one time that the market moves 2 standard deviations within a 9-month period, and it wipes out 9 months of previous gains. So if you go back and look, historically, the market moves 2 standard deviations once or twice a year. So if it does it twice a year, you've had a losing year. And if it only does it once, you probably haven't made much at all in the end. selling options carry an awful lot of risk. Credit spreads, as I just went through, you're risking far more than you can make. Just selling naked options is way too risky. You're carrying on significant or unlimited risk. We don't do those things. We don't do those things because we do fixed risk trades. But let's take a look at where the market is and what could be happening from here. There are a couple things that, believe it or not, are very positive with where the market is right now. So it's important to remember that this zigzag completed, remember the one that we were talking about for so long. If you're not familiar with what I'm talking about, go back and look at the SPY recordings where we showed that zigzag moving up to the 381 level time after time after time. That means that zigzag completed. Now we're looking to see what's occurring from here. Are we going to go to that 161.8% level at 420, or are we just kind of churning around and we're going to fall and drop to the downside? That's what we've been waiting for the market to tell us basically for these past 2 months. But when you look at what's going on with the pattern here following that completion, here we have a flat. So the market went through a flat. That's not surprising, right? I mean, we know that. We know the market's been churning and going sideways ever since that zigzag completed in January. So there's your flat pattern. And then once the flat completed, look where we are now. So I'm going to take the moving averages off just for the moment and then come back because I want to show you in a clear viewpoint, clear chart is what I'm trying to say, what could be occurring right now. So what does that look like? So we had a completion of the zigzag, went into the flat. So that was a corrective pattern following the completion of the zigzag. And now we have another upward qualified zigzag. So if you look right here with the low today, which the market reversed right about a 50% correction, that's a qualified zigzag with a 100% target at 410. And look where the 161.8% target is, up at 426. So there's the level up there that if this zigzag completes, really coincides with the 420 level, which is the 161.8% extension level from the big zigzag that started all the way back here with that wave 4. And turn the Elliott Wave on right here in June. So that zigzag completed. We went into a flat, and now, at least for now, we have a qualified upward zigzag. So all of this churn that we've been going through really isn't that unusual from a technical standpoint. It is classic Elliott Wave patterns. You look at it, it's 2 months. I mentioned to you that to do a sideways butterfly, which would be the one way to try to trade the sideways market that doesn't carry all of the risks that I just described. But then to capture the time decay within an at-the-money butterfly, you kind of need about 3 months. And the average market doesn't go sideways. But for 2 to 3 months, that was the analysis that I did when I was trying to figure out if I even wanted to take a look at adding in at-the-money butterflies for sideways markets, talking about trading directionally to the upside, trading directionally to the downside. And the only thing left is a sideways market. And so I didn't want to take the risk of the credit stuff and putting on the sideways butterfly. There just weren't nearly enough opportunities for the market to go sideways long enough, in my opinion, for an at-the-money butterfly to work. Now, you could find some stocks. Then we used to talk about, Microsoft back in the day when it would go nowhere. There were some stocks like that. And of course, the market figures that out, right? So if you don't have a very volatile stock, there's not a lot of premium there to collect. And so you need the stock to go sideways for perhaps even more than 3 months, 4 to 5 months, when you're dealing with a stock that historically doesn't move. The market makers, the powers that be in the trading world, just don't make it that easy to find a stock that stays sideways. Then you put on a sideways trade. It has to really stay sideways for a long period of time. But in the end analysis, with where we are right now, this could very well just be something that we look back on a month from now and say, hey, this is just doing what Elliott Wave does, completed a zigzag, had a corrective flat, went into a new directional zigzag, and then we're up at 420 or 426 or wherever, which is exactly what could happen based on the analysis right now. Talked, if you were tuning in Tuesday night, to the Trade Finders webinar where the ADX is very low as well. So let's go ahead and put that on and notice what's happening here. You can see that here's the ADX. This is what we noted, that, hey, we're right down here. The last time the ADX got down that low, we did have the move. And that was the AM pulse of this now qualified upward zigzag pattern. So now we're down here testing it again, and the ADX is starting to curl up. So does that mean the ADX is giving us an early indication that we're getting ready to move higher? Because there was a big reversal in the market today. And there's something really cool that happened in the market today that I wanted to share with you. Likely you've heard me tell the story of a friend of mine that flew into Orlando. Their flight got canceled, asked if they could come over and spend the night. They came over. Guy was a futures trader, spent the night. The next morning got up, started looking, wasn't an Elliott Wave fan, barely heard of it, really had never traded it before. And I shared with him the zigzag pattern. And so we looked at the futures pre-market, and it doesn't matter whether it's during the market or pre-market areas. When the futures are trading, they're trading. And we found some Elliott Wave patterns, and he was trading in his futures account based on the Elliott Wave patterns we were looking at. And he purposely missed his flight that day because he was so excited about this and wanted to learn more about it. Well, take a look at what happened in the market today. There's the 3-minute futures chart. You've heard me say I watched the market during the day on a 3-minute chart. So that's any of the stocks that we have alerts on, any of the stocks that I have on the watch list, or the futures itself. So the market opens up. You can see the time frame down at the bottom there. The market opens up, and right at the open, we try to rally a bit, and then there's a hard sell-off from 10 to 11, just basically, as you see, straight down for that hour. And then the market bottom. See how it churned a little bit right there at the bottom? And then we took off. And look how classic the zigzag pattern was when the market took off from the low at 11 a.m. So from there, we ran to the upside. That occurred at about 1 o'clock in the afternoon. We came down. And if you look over on the left, you can see that pullback, 38.2%, fib level, right on the nose. You know these rules from the zigzag class, the core class at least. What happens when you have a 38.2% corrective level in the B wave? Looking for a 61.8% extension in the C wave. Look where the market went. There's the 61.8% extension where it says the high 3,900. You can see the 61.8% just to the left of that, and over to the right, you can see 39.2, so 3,900.20, and it hit 3,900.75. Right exactly to the 61.8% level. And that occurred just a little bit after 3 o'clock in the afternoon. So from 11 a.m. till just after 3 p.m., the market created as perfect a classic zigzag pattern as you could expect to see. If you're in the zigzag mastery class, this kind of stuff, you should be used to seeing it. We're trying to get everyone to start to look and see charts this way. That's the idea. If you're not in the zigzag masteries class, look for the recordings. It's a fantastic class. It's an amazing directionally traded pattern. So that's what happened in the market today. So just a perfect example of how a zigzag works. And you can see the churn right there that occurred at the 38.2% corrective level right there at 2 p.m. So looking down at the bottom of the screen where it says 14, so that's 2 p.m. Eastern time, right there, hits the fib level, moving sideways, tries to test a little bit. There's one of those little head fakes that occurred right after that. And then we took off to that C wave extension. Same stuff that I talked to you about over and over and over again, time after time after time. This is what the market does. The market follows along with Elliott Wave, Fibonacci patterns. That's why we spend so much time talking about it. That's why it's our core system at Elliott Wave Options. It's why our name says Elliott Wave Options, because this stuff works. This is not a matter of, oh, do you believe in it or not? It doesn't matter whether you believe in it or not. It works. Now, why does it work? We could argue about that, couldn't we? Could we argue that there's some mathematical order to the universe and therefore trading, et cetera, and the markets move this way with the Fibonacci levels? That's what Fibonacci would have you believe. Or some people that still are non-believers but begrudgingly admit Yeah, it works. Say that, well, there's just enough people that believe in it that their program trading, the computerized trading is set for support and resistance on fib levels, etc. In the end, none of that matters. It just matters that it works and you need to be aware of it and follow along with it. It's a system that has been proven successful for over 100 years, and we've had great success with it as well. So I thought you might be interested in that. Light at the end of the tunnel here, a little bit of good news that this is now a really nicely qualified zigzag, big market reversal intraday from that sell-off that occurred to 11 o'clock. Turn back to the upside. And of course, we would want to look at volume, right, and see if there was some volume involved. And there was better than average volume. And that's what you want to see on a reversal day. You don't want to see a reversal day on below average volume because then it doesn't count. So a little bit of interesting things there. And also something that from a positive side of things, but unusual just the same, is the 10-day moving average. So let me put that back on the screen, the 10-day moving average. So taking a look at that, this is where a perfect illustration of how challenging the market is right now. I mean, you look at the big picture and you say, it's just doing what it's supposed to do. It's not that challenging. But when you're living it day to day, feels different, doesn't it? It feels a lot different. But when you look at this on Tuesday, we had a breakdown below the 10-day moving average confirmed yesterday. So there was a break below the 10-day moving average confirmed yesterday. Today we're selling off. And at 11 o'clock, it looked like all you know what was about to break loose. Looked like, here we go. Here comes the big dump to the downside. That's it. We tried a little rally early. It failed. We sold off from 10 to 11 a.m. and we're about to fall completely apart. But in the end, it just came down, hit that fib level, hit the 50-day moving average, and reversed. So a week, 2 weeks from now, we could be looking back at this time and say, yeah, that wasn't very much fun, but hey, everything's okay now. So a couple questions people have asked. I wanted to cover those things. I thought I would just head them off before we get to the Q&A at the end. Talk about how with this churn here that we are balanced. And the question was written in, and you know how I feel about questions. If somebody takes the time to write in a question, it's likely others are thinking about it, right? So a question was written in that you talk about how we're balanced, but I see far more long call alerts than long put alerts. Well, what I'm talking about as far as balance is the net delta, because yes, there's more call positions, but a lot of those calls have very low deltas. So I'm talking about the net delta, positive deltas to negative deltas is how we're balanced. Not necessarily that there's an equal number of positions. That doesn't matter. Delta is what matters. And that brings me into something that I wanted to, I mentioned this Tuesday night as well. And we've already decided on this, that we finished the Zig-Zag Mastery class in the next 2 weeks. And then in May, we're going to come out with our Strangle Mastery class. Now, we've already covered about everything we can cover regarding triangles. So the Strangle Mastery class is going to be dealing with options analysis. So a heavy focus on options analysis within the Strangle class, because it's going to be focused on the position, that strangle, that proprietary or next to proprietary strangle that I came up with that takes advantage of delta and gamma and the Greeks. And we've had a lot of interest in this. It's something that anyone that's trading options should fully understand, the Greeks. And so excited to announce that that's coming in May. So you want to look forward to that. That's great education, no matter what system you're trading, whether you're trading strangles, whether you're trading Elliott Wave, zigzags, doesn't matter what you're trading, understanding options analysis and understanding the Greeks is the key. There was a question also that came in that last week we had a big up day, but the call position still went down in value. How did that happen? Volatility came out. Volatility dropped, the VIX dropped, the IV dropped, and that's the understanding, because that doesn't make sense. That's what really confuses people a lot in trading, when they can have a call and the stock goes up and the value of the position goes down. They don't understand how that can occur. Well, it occurs because the volatility drops. And that's one of the key components in options pricing. So we're going to cover all that kind of stuff. So then when you can see that, when you can look at your screen and look at an options chain and see what's occurring with those Greeks, then you understand it. You may not be happy about it, but you're still going to at least understand what's going on and say, okay, I get it, I see it. But remember, when the volatility drops and calls go down in value, if the market reverses and we start back to the upside, that volatility gets pumped back in. So in the end, it kind of washes if in the end you end up being right on direction. If you're wrong on direction, well, different story. But if you're right on direction and you have a day where, hey, we went up and the value went down, when you get a significant move in that direction, the volatility pumps back in. That's called a volatility rush versus the drop, which they call a volatility crush. Well, again, those are all the types of things that we're going to cover going through that. So I wanted to specify those types of things. There was a question that came in talking about, is this the worst you've ever seen with where the market's going? And this is somebody that became a subscriber at the very end of January. So think about that. I wanted to talk about this from a psychology standpoint as far as the markets as well. So from the time the market bottomed last year in March through January, we had a hell of a run. It was fantastic, culminating kind of like the blow off top scenario in trading, right? With the best January being the best month I've ever had in 25 years. So when you look at that, what's the likely thing to happen? Until somebody can create a system that's 100% accurate, you're going to live by probabilities and possibilities, percentages in the marketplace. So when you've been on a run for a year and then you just had a spike even higher, it's almost like one of those vertical moves, which I don't like. You go 45 degrees angle and it spikes. What's likely to happen? See, that's from a psychology standpoint. When somebody's been watching us and they see, performance, great month after great month, they're like, okay, I've watched long enough. Now I want to join. Well, right when they come in, things are due for a correction back the other way. It's just the exact opposite of what we talk about with max pain, where when you're ready, when you've had enough, when you're like, I can't take it anymore, this is it, I want out, I'm done, that's the time to double up, because that's when things are about to change. When you get to the point where you just can't take it anymore, that's the point where things quite often change. And that's where, again, it's hard to do, but that's when you want to double up on things. And the market is usually ready to turn at that point in time. So we're, again, a lot of things that Zig-Zag's qualified. We're at that range of 2 to 3 months is about the end of a sideways move in the market. The whole max pain thing it's been frustrating for everybody else, frustrating for us as well. And that's the time when it's like, okay, now I want to put the pedal down. And I hate using this analogy. And when I used to do live seminars, sometimes I would do contract work for other companies. They were aware of me, et cetera. And they would say, don't ever use an analogy of trading to gambling. But whatever, it still applies in this scenario. If I go to Las Vegas or to a casino, there's only one thing that I will do in the casino, and that's craps, because it has the best odds in the casino. I refuse to play anything else, because that's how they build those big, huge buildings, is because people come in with these crazy dreams and they end up losing. When you put odds on the don't pass within craps, it's the best odds of anything in the casino, unless you can count cards playing blackjack. And if you do that, you're eventually going to get kicked out or beat up or something. So you're not going to have a very long career doing that. That's the reason they only do that, is that you go there for entertainment, but you don't want to go there for entertainment and walk away all upset because you lost all your money. So I do what is a good hedging system, which is the same thing that we apply to trading. And so it's a similar thing. If you're on a run, so if I'm playing craps and I've had a nice run, I back the bets off, because I learned a long time ago in the world of trading. And the question, is this the worst thing? No, it hasn't been. What do you learn most from? Do you learn most from your successes, or do you learn from your mistakes or your losses? You learn from the mistakes or losses. Why? Because it hurts more, right? That's when you gain the education, and that's when you become better moving forward. And so if I would be on a long streak, that's when you back down. You bet less, not more. But the psychology is, oh, I'm playing with the house's money now, or I'm playing with the market's money. I'm playing with my profits. So I'm going to put on bigger trades. But you're doing that at a time when probabilities would say you're likely to go to the other way for a period, because nothing's 100%. It just doesn't work that way. And then if you've had a streak of bad luck, it's in the don't, somebody throws a whole bunch of sevens in a row, whatever, on the opening roll, and that's painful. That's when you double down, when things have been going the other way significantly for you. So when you take all these things that I've just talked about from a psychological standpoint, I really think we're at a point now where things are getting ready to turn back around. So if you're feeling like, oh man, this has really sucked, I don't know if I want to do this, good, because that's when things are getting ready to head back. That's when, again, you want to put the pedal to the metal, not throw in the towel. That's the exact wrong opposite time to do that. So anyway, those are questions that have come in. I wanted to cover them all. And so I'm sure others of you have been thinking about the same thing. So summary of lessons: don't compound. Leave the banks to compound your account, bank accounts. Why can banks do compounding? For one of them, they borrow on the short end of the yield curve and they lend on the long end. So they keep that spread. That's why we always talk about the 2-10 yield spread. And do you know that banks are allowed to lend out every dollar they take in deposits 33 times? Talk about leverage. So they can do the compounding. Don't do it in your own trading account. That's greed. That gets you in trouble every time. Always leave cash available in your account for when things like this occur. So anyway, let's move into taking a look at where we are with the portfolio. If there are any questions specifically on the market, I'll be happy to take those right now with what we've talked about with the flat, zigzag, etc. We'll go through those. Otherwise, we'll move into the portfolios.
Thanks, Rob. There's no specific questions on the market. There's a number of people asking for some commentary on strategies that may be good in a sideways market, which will hold for the general discussion at the end. But Ken Faber has his hand up for a comment. So Ken, you should be able to go ahead and unmute and ask your question to Rob.
Hey, Rob, how are you doing?
Good, Ken, how are you?
Very good. Good to see you, my friend.
Well,
So
thank you.
You and I have both been at this for a long time, and I hated this past week. It was, I was listening to what you were saying as far as the VIX and market volatility. I was following the VIX. I didn't see it, but it was a couple of days where I had positions and the stocks were going in the direction and they were losing money rapidly. And I was like, it was like a correlation of 1 on volatility for the week. So I don't know if you saw it to that extent, but I was greatly relieved to see today. So even, I've been doing this a long time. It's just like, I still don't like it. I understand it. But
Right.
As you're saying, it's not fun. And that is the time to hang in. And I'll confess, I'm still plagued. These are the weeks where I'm tempted to quit and I should do something else.
Yeah, I totally understand, Ken. And then, as you said, for those of you that don't know, I've known Ken for a very long time. Ken knows his stuff. And so he's still saying that this week didn't feel good. And so, there you go. For someone that's been in the game for a long time, these things happen. It doesn't make it any easier when it happens. But when we have something that occurs like that, and Ken knows this, that reiterating what I said before, as far as when the market goes your direction and still the value of your options go, it angers you. I mean, it's more than not feeling good. You actually get mad and get angry. And that's when you start to think that, is the market rigged, whatever. It does move into the Greeks and how things work. And a lot of that stuff is designed for exactly what Ken's talking about, what I've talked about, what you're likely feeling is, time to to throw things in, bail out, whatever. Because remember who's likely on the other side of your trade. Quite often, you know, there's market makers on the other side. If you cash out, throw in the towel, then they win. And so these things happen. They can't get away with it for very long. That's the thing. When they play these games with the prices, they can only do it for a very short period of time, and then things have to revert back to the norm, or the regulators will come look at them at that point in time. So usually these things, when they occur, they're short-lived and they come back to the norm at some point in time. So Ken's talking about the reversal that occurred today, and we've talked about that and how the zigzag looks like it wants to move back to the upside. And then I had one other question that I wanted to refer back to. So we have April, May, and June options coming up, right? So the first ones we'd be concerned about are April, because that's a month. And can some of these deltas recover within a month's time because they're low? And you know, what's the realistic movement? Well, first of all, we have no idea. The market can do an amazing number of things in a month, and it can make an amazing move if it wanted to within a month. So that's speculation. Nobody knows how fast the market can move up and hit those levels if indeed this zigzag holds and we head up and all of those targets are hit at 420. But the other thing to remember is the delta will change. If the market continues to move and you're thinking, well, you're not going to make very much of every dot, the delta will go back up, and gamma will come back, and volatility will come back to the calls if the market's moving back to the upside. So all those things change, and all those things add in together to allow things to come back. Maybe some positions don't come back and become profitable. Maybe they don't, but they recover a lot, and then you live to fight another day. And that's how things work. I mean, we snuck in that quick Facebook trade that worked out really well. We'll go through that when we get to the portfolios, but that was something else that I wanted to add in there, that even though some of the call positions have low deltas, some are out of June. I mean, the market could be significantly higher in June than where we are right now. Things can occur in a very short period of time, as you've seen. So with that, let's go ahead and get into the portfolios.
Rob, before you move on, we do have a couple other quick voice questions if we could put them through to you. So Jeremy has a question for you. Jeremy, if you wanted to go ahead, you should be able to unmute your microphone and ask your question for Rob.
Hey, Rob, good evening. I see we're in a lot of tech positions, and I know we tend to look at the S&P. Do you ever look at the Qs or the NASDAQ and look for what may be going on pattern-wise there?
Absolutely. In fact, we can pull it up right now. The Qs. We took a look at that Tuesday night. I don't know if you happened to watch Tuesday night, but there's the Qs. Not a significant difference from where we are with the market, except you can see that with the wave 5, the large wave 5 pattern that is in an extended level on the SPY, has a qualified zigzag here in the wave 4. And so when we look at this, you can see that we may be in the midst of, let's see if that's a flat or a zigzag right there, within this wave 5. Nonetheless, we know at this point in time that it is a qualified, or excuse me, a complex wave 5 on the Qs. And just to hit your point about, so it's 62%, so it's a zigzag. So there you go. There's a zigzag pattern in the Qs that's qualified as well, that hit dead on the 61.8% fib level. That actually looks even better than the SPY pattern. So we have a wave 4 that hit 50%, and that was complex as well. See the zigzag pattern to the downside here on the wave 4. So there's a complex. Look at that. Look at that. 100%. Glad you asked this, Jeremy. Look at that. The perfect 50% corrective level on the B, 100% extension on the C. I mean, does it get any better than that? I mean, that's as good a zigzag example as you can have. And so that completed. So we had a complex 4 with a perfect zigzag, and now we're looking to have faith in this stuff, is what I'm trying to say. This stuff works. And so here we are at the 62% level, and look, 161.8% extension on that zigzag takes us right to the wave 5 target within the tap box. Again, I've said this multiple times. I'll continue to say it. It's always better when you have more than one Elliott Wave pattern giving you the same price target. Obviously, the odds of hitting that price target are increased. All right. I mean, it's much higher percentage chance when you have more than one pattern giving you the same price target. So there you go. I mean, that looks better than the SPY looks right now. So let's talk about, well, why haven't we gotten out of the tech positions? Tech got hurt, right? Well, tech was the leader. So big tech was leading, big tech got hurt. Well, where's money going to go for the next leg to the market? Is it going to go to the stuff that's doing well right now? Or is it going to go into the stuff that's been beaten up and has the greatest potential for growth to the upside? When you get to the point, and it goes right back to Max Payne, and you've heard it on the financial networks. I know you have, because I have, if you listen to them at all, and they're like, you know, tech is dead, you know, tech was overvalued. When you hear all this negative stuff, that's when the smart money begins to sneak back in. So when it gets to the point where it's on the financial networks, we used to talk about, Ken probably remembers this, he's been around as long as I have, that when we go back to the, although I shouldn't say that, maybe he's not as old as I am, but when we go back to looking at stuff that used to be on magazine covers, like, you know, gold is on the magazine cover. Was that the time to go buy gold, or was that the time to sell it? That was the time to sell it, not buy it, because gold had been on this big, huge run. It's the exact psychological connotation aspect that I've been talking about since we started the broadcast is, you know, when things are flying high, that's not the time to get in. That's the time to get out. And when things are beaten up, that's not the time to sell. That's the time to buy. That's how the markets work. And that's how the professional traders make money off of the retail traders who don't understand those things, and they succumb to the extreme levels of fear and greed. At this point in time, tech has been beaten up. The Qs look great as far as the pattern right now. And so I think you could make a really strong case that if we do get that C wave extension up to that 420 level, where's money likely to go? We had the VTV, we had the value trade that worked. Money rotated there. It's come back out of there. So where's it going to go? Well, very likely it's going to go back into those stocks that were the leaders initially and that have been beaten up the most. Good question.
Thanks, Rob. And I know we're going to take a while to get into the portfolio, but we've got one more voice question from Ed that I'd like to get through to you before we move on.
Sure.
Ed, if you wanted to go ahead and unmute your microphone, you should be able to ask your question to Rob. I'm not sure if Ed's got a technical problem there. So, Ed, I'm going to let Rob move on. And if you've got a question, if you want to answer that.
Can you hear me now?
Yep,
oh, we can hear you. Well done.
I have a very quick one from last night's webinar on Google. Does it looks to me, I'm wondering if it's consolidating and if that might be setting up for a launch pad. I was just curious about that.
Let's take a look. Normally do this at the end, but since you got through, we'll go ahead and
I
do
sneaked
it now.
in, yeah.
Yes, you snuck it in there. Good job. Yeah, that's the definition of a launch pad right there. Good spot. Yeah, we did use Google as an example because Google shows up all the time with zigzags. That's certainly not a zigzag that it's in right now. But yeah, for a stock like Google that trades over 2,000, yeah, really good spot there. I'm glad you got a chance to ask that in there, because that could very well be setting up for a potential blast off move. Yeah, looks good. All right. We good, John?
Sorry, Rob, left myself on mute.
Hey, John, if you want to do a voice, you unmute your mic.
Thanks very much. No further questions. I'll let you move on. Thank you.
Okay. All right, so let's start with the volatility portfolio, and we'll go right into checkpoint. And here we're going to come down, it looks like, and test that 110 level again. We broke below. So this is the same thing that occurred with the market, but yet today is the second day. So today is the follow-through day of breaking below the 10-day moving average. So when we look at that, and we talked about this before when it was down here at the beginning of March, there's that in very strong area of support at 110. Maybe it needs to come down and test that level again. Look at the DMI here and see that ADX was pretty low as well. It's also starting to tick back up. So is that ticking back up because a downtrend is forming? Possibly. And if that DMI continues to form and we get the ADX above 20, because remember, it hasn't gone above 20 yet. So we could have the ADX ticking up. That was a result of this upward move here. And just this little downward move allowed the negative directional indicator, which is more responsive than the ADX, to cross over. But yet those could recross in a 2-day time frame if we turn and headed back to the upside. It would be surprising, but the market surprises me all the time. It's always full of surprises. That to have such a clean double bottom like this right there and then start to the upside, for this to come down and then not hold 110 and break it, or potentially this is an upward zigzag pattern as well. You can see that right near the 61.8% level and looking like maybe that wants to turn back to the upside as well. So the market would really have to tank for, in my opinion, checkpoint to come down and break such a strong level of support. It was resistance for a very long time. It's been support for a very long time. We just came off of a very classic double bottom. For that just to be a weak bounce and then come back and break that would be surprising. But as I've said, sometimes the market surprises me, but it does have a qualified upward zigzag there. So it looks like we could be moving higher from there. Akamai, now this kind of goes into what we've been talking about as far as where's the money going to go, because Akamai has actually been creeping higher. It's held this area at 95 again. And so it's been ticking back to the upside. So there you could draw that line up here wherever you felt more comfortable. Multiple touches is what I like. But this is starting to create a pretty nice pattern of higher lows through there. You can see that upward trend and notice that it's a 45-degree angle. Look at the CCI and it's not too excited yet, but that could all change and turn around. The ADX trying to turn there, maybe a 1-day turn. Maybe not. Still hasn't turned back to the upside yet, but awfully low. So we're seeing low ADX in the market, low ADX in all these stocks. One thing that we know is something's getting ready to happen. So we're nearing the end of this frustration period here. Still can't say for certain that we break to the upside. Just gave you a whole bunch of reasons of why that could be the case. Still could break to the downside because that zigzag pattern completed. But regardless, it doesn't matter which way it breaks. We'll be good either direction. It just needs to break. That's the thing, right? That's the key. It's not getting the direction right. That's not the issue. The issue is getting a direction from the market. So moving to VMW, also been holding in pretty well. Tried 150, couldn't break it again, but has held a nice reverse day, nice outside reversal, closing at the high of the day. So it opened at the low, closed at the high. That's pretty strong from a reversal standpoint. And now we're trying to really focus on holding this 145 level. 140 has been the primary area of support over past really year, basically. But it's trying to hold 145 and make another run towards that high up around 155, 160. And I bet that's a qualified zigzag as well. You can see the 50% corrective level. So qualified patterns do not guarantee you fulfillment, but when you have this many of them that are becoming qualified, it's certainly something that we have to pay attention to. And it adds in there and makes sense. GLD, I was message to guy from a guy today that not Guy Adami, not from that conversation that we had, from a guy, not Guy, that felt like gold was getting ready to take off and make a big run to the upside. Well, I wish there was something more definitive in our technical patterns. I hope he's right, because I think gold is due for a heck of a run as well. Kind of a little bit of that launch pad looking effect right there as well. And it did hold. It looked like it was going to break through 160. That was a pretty good head fake right there, but it's held a level that it needed to hold. So you can see going all the way back to support from last year. So there's our area through here, right at 160. It's held it, and it's consolidating on top of it. So maybe it is getting ready to make that blast off back to the upside. It certainly seems like with everything going on, we talked about this. We talked about it in the interview, Guy Adami and myself. I don't know if you've watched the video. It's on YouTube now, but neither one of us could figure out why gold was where it was. And was an institutional gold trader. And we both agreed that based on what's going on, liquidity, dollar, everything else, it made no sense that gold wasn't catching more of a bid. Neither one of us thought that it was the Bitcoin phenomenon that was causing it. That's more on the retail side. Certainly, maybe some institutions are in Bitcoin. I don't know, but certainly the Federal Reserve's not, because they said they're going to come out with their own digital currency. When the Federal Reserve does, you think they're not going to want to push people towards that? What's that effect going to have on Bitcoin? You know, all those things are questions that will be answered in the future. But it doesn't seem like there's institutional money has abandoned gold for something else, is my point. And at some point, it's going to come moving back into it, which at that point could yield a very nice move to the upside. Now, one last thing, we did close out ADM in March. Remember, that one had an upside break, and we were holding the put as our lottery ticket type trade to see if we reversed the breakout, and it just hasn't occurred yet. Remember that triangle breakouts get reversed, but just as gaps getting filled, we don't exactly know when that could occur. We thought that, you know, there's a possibility, even in a weak market, that it didn't come back to the downside. Or I shouldn't say weak, it's been choppy. It really hasn't been that. It's felt weak, but when you go back and look, it's just been 2 months of chop. So that put expired, and we're left with the gain that we had from the call option. So that one's closed as a profitable trade. Held the put for, I think, 6 weeks or something to see if we could get a downward move. It didn't occur. So that one's done and closed. So moving to the high value, we took a look. We'll start with Facebook. And we saw that we did close out Facebook. And man, did we time that well. There was the exit day. It turned out to be a very nice gain in a short period of time, 4 days. And you could see the reasoning. You can see it on the website with the graph. You know, we're hitting the target, which was there around the previous wave 5. Also the round number of 300, you know, just drew it right to it. We were overbought from the 10-day moving average. And here's where we are in Facebook now. It's been straight down since the day we exited the Facebook trade. So classic, I mean, we nailed that one. That was as good as it could get on our exit as far as moving down. Now, there's a lot of people that feel that if the market heads back to the upside, Facebook is in a position to turn around and be a leader again. We'll follow the pattern. We'll see. It's got to break 300 now because it's established that as a point of resistance. If it does, and the DMI supports it, et cetera, we could come back into Facebook at some point in time. But for now, we just nailed that trade. We couldn't have entered at a better time or exited at a better time. That one was a spot on gold star. NOC. Let's take a look at that. Finally, starting to move. Have you been watching this one? I mean, we waited for a very long time for this to start to move to the upside. And I had mentioned before that it might take Congress to start getting into the budget, to start talking about defense spending. Remember, the market always looks ahead. There has been speculation that there is going to be more money than I expected to be put into the defense budget with the new administration. And it looks like the market is feeling the same way, because the market's looking ahead and the market's moving to the upside following a very long consolidation. I don't know that you could really call this the launch pad. It was just too wide here. Certainly was a sideways consolidation, but it's breaking back to the upside now. So there was your sideways. Maybe you could have gotten a profit out of an out of the money butterfly there, maybe just over 3 months sideways, but even a little bit further if you went back a bit, but breaking nicely to the upside now, finally. So catching a bid, looking really good on NOC. Amazon, kind of dealing with that same churn that the market is. Just when it looks like it's getting ready to run, comes back down. But if it pivots from here, we also have a set of higher lows at this point in time, down here at an area where it needed to hold. We would have probably gone back into the put side had that area broken. You can see that we didn't get follow through. There was our breakdown, and we turned around, and had we closed lower there, we would have broken that low from September, but it was a reversal day. We headed back up, and now we're working on a bit of support here at the 30-40 level. So perhaps it moves back to the upside from there. Amazon's one that no doubt you're aware of, can really run. So when you talk about the possibility of what can happen in a month's time, Amazon could be at 5,000 in a month. Anything is possible there. Tesla, an awful lot of chatter about Tesla now with all of the competition, etc. The bottom line is it's holding, and we have a call and a put. So quasi strangle here on Tesla, sitting right there at the 640 level. Another one that it tried to break down, reversed back to the upside. We came back down here, and we're sitting ever so precariously today, but it was a reversal day. Got back above 640 today, which is the point. The reason I drew the line there is that's the midpoint of the triangle. So it retraced that breakout. So from here, it had the breakout move, and it's retraced it back down, which is what happens. As I mentioned before, ADM didn't do it quick enough, but this is what occurs with stocks following a breakout. Now the question is, can Tesla hold here? If it doesn't hold here, then it goes back down to, and it's still qualified as an upward wave 5 pattern. But if it doesn't hold, it comes back down here. So it makes a significant move to the downside if we don't hold right here. If it does, if it begins to bounce, then we'll take the put off. But when you're at such a precarious level, it makes no sense, even with signs pointing to potential upside out of the SPY, out of the Qs, with everything basically that's occurring right now, even the psychological stuff that I talked about. Taking the put off now makes no sense because that could be a significant move down in a very short period of time. So 640 is the key there. We just have to watch that and see what continues to happen out of that level. Yum. Strangle was breaking nicely to the upside, got to the point where the call was looking good, and then we've retraced back down, but it reversed today as well. So when we take a look at this, this occurs in times as well where you have breakout, and you can see that it's 74% on the corrective level. Didn't quite make it to 78, didn't quite make it back to the breakout point. So is this going to be one of those that's in between that 70% that Elliott kind of viewed was potentially to disqualify the pattern versus the fib level at 78.6? Or is this just, we had a 1-day reversal here and we're turning around to head back to the upside? So let's look at the moving averages. So you can see the 10-day moving average right here, and close back above that 10-day moving average and see what happens in tomorrow's trade. But you know, this one's gonna break and move. Paycom, it trades like a tech stock, but it's kind of really not. It's, you know, business related. And so here is the major support that it needs to hold. And you can probably see from here this massive descending triangle that is formed. So Paycom is getting ready to move. And this is one of the ones that we've talked about. If the market breaks down, we've got our list, and I've showed them to you multiple times in the insiders meeting. If Paycom breaks down to the downside, it is a very fast move down to this level. Very quick move right down here. And so this is one of the ones that we will load up on the put side if it breaks 360, but you don't want to do that when it's holding support. So it's trying very hard to hold this level, and that's the way we've been approaching it, holding support. If it breaks it, then we'll reverse and we'll go heavy to the downside. So we'll take the calls off and add puts. But at this point, it's doing its best to hold that level. Let's look at the moving averages. You can see that we did close below the 10-day moving average. It kind of built some pretty good consolidation there around 380. Would have been nice to see it hold there. It didn't. It wanted to come down and test this level again. But one thing that we do know is this is going to make, and this will be something that we trade regardless of what the market does, because it has such a massive mouth to the triangle. Look at the width of that. It's huge. So this could be moved significantly. Could be a 500 in a very short period of time, or it could be a 280 in a very short period of time. So huge amount of potential movement out of Paycom once it makes its break from that large descending triangle pattern. Netflix got an upgrade last week and was looking ready to go. You can see there was the move back up to 540 on the analyst upgrade, and then not a good day today as we came back down. Also, another one that is, there's two levels of support here. As we've mentioned in the past on Netflix, 500 held last time. If it doesn't, then there's more support down at 480. You could argue that the support at 480 is, well, it's about the same, but there's a lot of congestion here at 480. So one could make the argument that the support at 480 is stronger than the support at 500. Regardless, with today's move to the downside, we're a bit oversold. So short bounce would just be to correct an oversold condition. But when you get concerned on Netflix is when you see a break of 480. Until it breaks that level, the 500 could hold, and you could certainly argue that this is a big descending triangle pattern as well. Now, if you're wondering about, well, wait a minute, these big stocks with huge descending triangles, isn't that bearish? A lot of people teach that an ascending triangle is bullish and a descending triangle is bearish. That's marketing. I did the analysis. You know, I've been a triangle person for a very long time. And I can tell you from the analysis, it does not bear that out. It bears out that it can break either way. That's just marketing, selling stuff when people say that. The truth is, the data proves that triangles can break either direction. It doesn't matter whether it's ascending, symmetrical, or descending. They can go either way. So it means it's going to break out. It doesn't necessarily mean it's a downside breakout. But obviously Netflix would be another one that we would want to take a look at as far as potential move to the downside if it were to break that level, because it really has no support until it gets back down here to 400, because that move to the upside was not vertical, but pretty pronounced, almost vertical, certainly more than 45 degrees was that move to the upside. So let me draw a correct angle of ascent on that move to the upside. There's the angle that it moved, which is clearly more than 45 degrees. So now let's go to, well, Facebook we did already, which was the one that we closed in a quick 4-day move. So that's volatility and high value. And so with that, I'll open it up to any questions on either of those portfolios. Otherwise, we'll move into the impulse.
Thanks, Rob. There's a little bit of discussion on Paycom. Ken was just curious to know what inspired the purchase of the additional calls in Paycom. And then there's a number of people just discussing whether or not it would be worthwhile taking some puts there at the moment, given that they're relatively cheap. So I don't know if you can comment on that.
Sure. I mean, it's a valid question. Just the consolidation here with the fact that it looks like it wants to hold in this area. It's tried to break it. It hasn't been able to. It gave us a head fake back here. It looks like it wants to hold this level. And go down there and look at the CCI. At the time, the CCI was moving up. And so it looked like we had made a higher low. Right there is where we were out of the CCI at the time. So we had a stock that was sitting on a ton of support. Our shortest term indicator, which is the CCI, that's even shorter term than the positive or negative directional indicators within the DMI. So that was the short signal that made a higher low. Looks like maybe we're getting ready to make a break. Didn't happen. Came back, and now the CCI is back down at support. So the CCI is pretty low. It's below minus 100. It would be more suggestive of this triangle breaking to the upside than the downside. But again, we never rely on any one indicator solely. So good support. And does it make sense to add a put right now? I think with it sitting dead on support, the more prudent thing to do is let it break that. And then we can go ahead and add a put in beforehand. So that's the thought process there. But it's a very valid question on, why at that point in time did we add to it? But that was the reason. The CCI made a higher low. Looked like we were signaling an upward breakout. We had held this support level for quite some time. We're just a little bit below that now. So it didn't hold the 380, but it's holding 360. And this is going to move. If it starts to break 360, we will reverse and put the put on right away. You could argue with the triangle that, well, why not put an out of the money put on? We could put a cheap put on. If we see any sign of weakness, that's a likely scenario. I just think we want to see just something that shows the potential for the downward move at this point in time.
Okay.
And that could come
Thanks,
tomorrow.
Rob.
I mean, that could happen tomorrow.
Thanks, Rob. And I have a voice question for you from Kurt. Kurt, if you wanted to unmute, you should be able to ask your question to Rob. It looks like Kurt might be having an issue there. Just give him an extra second. No, so Kurt, maybe I'll come back to you and try in a moment. Rob, there's a couple of questions also from people in general, just around planning for adjustments. And I'll give you this one specifically from Bhupinder, who's saying, I have faith in Elliott Wave, just wanting to plan. Since I'm using a small account, which has scaled down to 60%, how much dry powder should I move into the account for adjustments? Would you recommend about 20%, i.e. 2K, so that I can participate in the adjustments? Thanks so much, Rob.
Actually, she nailed it right on the nose. That would be about the number. But also remember that if we do break to the upside on that zigzag, we'll take all those puts off. So that will bring some cash back into the accounts as well. Maybe not a lot, but some. But yeah, no, she's spot on.
Thanks. And Kurt, I don't know if you've been able to unmute your microphone. It doesn't look like it so far. So I think we'll move on. And if you wanted to pop your question into the Q&A, I can relay that to Rob for you. So that's it for the moment, Rob. Thanks very, very much.
Sure. Okay. Now we'll go into the impulse portfolio. Alibaba. Now, I've been saying for quite a while that this is a stock that could really run to the upside. Certainly hasn't done that yet. And here we are back down. So one of the things that we're seeing is a bit of a flux, aren't we? We're seeing some stocks that are sitting on support. And then we've got the market, the SPY, the Qs, other markets that are showing qualified upward zigzag patterns. Some stocks have held in there better than others. So we're not seeing, normally when the market breaks, everything goes with it. It's like a suction. I use the analogy, if you've ever been on a cruise ship and you've used the toilet in the restroom of a cruise ship and you flush it and it scares you like it's going to suck you down there with it. That's what normally happens to most things when it's just like sell first, ask questions later. When the panic selling starts, when the VIX really spikes and things start to go down, everything goes down. We're just not seeing that. Everything is not getting hurt. Certain areas are, but not everything is. There's this, now President Biden has a war of words with China. Is that having anything to do with this? Baidu opened on the Hong Kong exchange and it was a dud. There was great expectation that with Baidu, moving and opening on the Hong Kong exchange or setting themselves up on the Hong Kong exchange, that it would be ballyhooed and well subscribed, and it wasn't. It just was. It was as thud of a dud as you could possibly get. Did that carry over into Alibaba? I don't know. I don't know that Alibaba was forecast to move to the Hong Kong exchange as well. And this is consumer based. So with money to spend, with all central banks in all banking systems injecting liquidity, it's not just us in the Federal Reserve. You would think that this one would move to the upside, but we talked about this before, that it had two areas of support and it's broken below 240. It's tried to break above it a couple of times, broken down. We're holding 220 right now, which is extremely important for Alibaba to hold. And then this one is kind of like a apple, where if it breaks to the downside, it's not a clean cut. It's not one of those vacuums like Paycom and some of the others that we've looked at to where it's just boom, it'll be a big flush to the downside. This one would be a stair step down. It's not the kind of thing that we would want to wait and trade if it moves to the downside. So with that, we just get out and let that one go and move on. But it's at an area where it's held before, it needs to hold again, and we'll see what happens. So we have two breaks below the 10-day moving average, but as you saw with the market, that signal didn't hold for any follow through. Big reversal day today. The market needs to carry through with that. Futures are up a little bit right now, but it's not meaningful at all. So it's not telling at all what's going to happen on a Friday. And that's really interesting that we have tomorrow, with where we sit in the market being a Friday. Who knows what's going to happen in tomorrow's trade, but some follow through to the upside would go a long way towards confirming all those zigzags that we looked at in the beginning. But Alibaba, I wanted it to hold and get above 240. It hasn't. It needs to hold here, and decisions will be made on that one from this 220 level. That's the key level there. Neo, the put has started to regain some value with this move down. You can see the move to the upside today, but take a look at this. It didn't even get back to the 10-day moving average. It was just oversold. So today's reversal in Neo is meaningless. Doesn't mean a thing. And this pivot point that it had right here, now if it trades significantly higher tomorrow and the low never comes down here and we have 2 pivot points, well, then we can start talking about maybe we're building a bit of a potential uptrending pattern there. But that's just speculation right now. It depends on what happens in tomorrow's trade. But my point was this pivot point is in the middle of nowhere. So it wouldn't surprise me if that was just an oversold bounce, which it was an oversold bounce. We came back up. We rectified the 10-day moving average. We moved sideways. We're heading back to the downside again. And as we've talked about in the past, if we don't hold here, Neo goes to 20. And it goes to 20 in a very short period of time. So it is absolutely no way to take the put off right now. We go down to 20. That put is $10 in the money. That's a really nice trade. That recovers everything if that occurs. But, you know, it's got to continue to break down first. And we'll see what happens. Maybe Neo turns and goes back up. I don't know. We'll see. Oil coming down hasn't helped these EV stocks at all. The XLY, and it almost makes you a little bit nervous that everybody is saying this is where you need to be. Consumer discretionary. We talked about it a long time ago. This is one of the sectors that should do well, even in higher interest rates, et cetera, even in a weakening economy. This is where we should be. But, you know, so many people are saying that when everybody starts talking about it, it kind of makes you nervous. I like it when we're kind of like, this is where we need to be, and not everybody's on the bandwagon. But lots of financial networks are talking about this. Kramer's talking about it, which he still has a lot of viewers, et cetera. So for us, want to see it turn around and continue back to the upside. Also, we have a qualified zigzag here as well in the market. You can see right there. So that gets us to 175 with a 61.8% extension if that occurs. And support is right below where it's trading now. So right in this area there around 160 is support, which is pretty much where it bounced and reversed from today. So you can see the low was 161. So it got awfully close to that area. Talking about money rotation, if it doesn't go back into tech, that's just more money that will go into here. So we're going to watch for that, with the fact that, you know, it kind of goes to the same theme of what I was talking about as far as back in the day when something was screaming, you know, the market is exploding to the upside and was on all the magazine covers, or gold or whatever. It was time to get out, not get in. Well, when everybody starts talking about where the rotation should be and where we should go, we'll see how that plays out. Qualcomm. Oh, you've heard this story before on Qualcomm. It's one of those that has a great business model, quasi monopoly. Back at support again at 130. We had gotten above it, looked like we were holding it, trying to move higher, and then yesterday broke down below it. I mean, we know what happened yesterday was not a pretty day, and it reversed today. So it didn't get a follow through. There was no follow through day on breaking the 130 level, but that's only half the battle. It actually has to get back above 130. So we need to turn around and get that one back above it. This one is in a qualified 5-wave pattern to the upside, and we have as we've talked about before, which has been our target, that gap that still needs to get filled. This one got filled over here in November, and now we want it to come up and fill this one as well. Moving to RRC. These stocks have caught a bit of a bid here. Most of these little ones look good today. So you can see that wave 4 correction at 50%. So it could just be that this 2 months of frustration and pain that we've been dealing with is just all part of bigger patterns that are taking time to work themselves out. Perhaps we got a little bit spoiled last year with the market moving relatively quickly, but it just doesn't always go that way. So we have a wave 4 here at 42%. So that gives us the target up at 13, which has been the target price. I mean, all in all, you look at it, it's held in there really well. And the support resistance line there is 10. It had broken below it, but it got back above it today. So if we can hold above 10 again, that could be enough to send it moving higher there. CNHI, also one that is done okay considering everything. I mean, look at that. I mean, it's really not that bad of a pattern. We just like to move it, just like it to move a little quicker, right? I mean, it's had that same churn, right, since February, but yet it hasn't sold off. It hasn't gotten hurt, just hasn't gone up. So it still looks good. The pattern still looks good. It just needs to get another surge, catch another bid, as they say in the industry, to where it starts to head back to the upside once again. But 15 is support. And there was the area of the launch pad at 15 before. Not really that much of a blast off. It was one day, right? Came back, filled the gap, came up, and we got another gap. But as long as it stays above 15, should be ripe to continue to move. So again, outperform what the market has done, although just barely. Beyond Meat. Here we are. Looked like we were going to hold 140 here. This is another one where the question could be asked about the adjustment. Looked like 140 was going to hold there in the middle of March. Looked like we were breaking back above it. And now we're back in this. It's got a whole congestion of, I mean, you could pick several different areas of potential support, but the primary one's down at 120 right there. Doji today, we'll see what that means in tomorrow's trade. I'm really not that oversold from it. If it breaks 120, then it's a whole different scenario. That changes the game significantly. But as long as it holds above 120 with a good tape, this is one that can rocket like crazy as well. So again, going back to how much value can be gained back in a month. Well, it went from 120 to 220 in a week. So that tells you the potential that stock has. That's 100 points in a week. Apple, also trying to fight back. Really doesn't want to give up that 120 level, as you can see, holding in there really well. 72% correction. So this is Elliott would be a little concerned about that, even though it didn't hit the full fib disqualification of 78.6. But we'll see how that plays out. But a bit of a descending triangle being formed in Apple here as well. And to see Apple break down would certainly be a big negative for the market, right? I mean, it would just be, Apple has more cash than some countries do. If that one breaks down, that's one of the generals, as they say. It's undervalued. The rest of the market, this is more money is going to go if the market does turn and head back to the upside. Feel very certain of that, but it's got to hold 120. And this is one, as I've mentioned in the past, and I commented on it just a bit ago with Alibaba, that if it doesn't hold 120, it's not the greatest stock to trade to the downside. So this is not one that we would turn in reverse and trade lower. We would just close it out and move on because it's just too many. It would take too long, too many stopping points. If we break down, we want the stuff that can make money in a very short period of time. And there's plenty of those, including the market itself. But Apple's not going to be one of those. ENBL. Looked like we were really moving here about a week ago. And now we're back to this area at 6.5, which is where this one needs to hold. It did today, but talking about these reversals today, the market reversed. So all these reversals aren't stock specific; they reversed with the market, and that's an important thing to note. We could look from a positive standpoint of still maintaining, if it holds here, a set of higher lows. The wave 4 is only 33%, so it has qualified as a corrective move yet. But that could just be where we need to go to turn and head back up to that wave 5 level. But it needs to hold 6.5. So that's a key level where it is right now. We'll see what happens tomorrow and Monday there. FLDM just absolutely will not give us the break of 4. It's been holding there for the entire month. You can see that it came down, got close yesterday. I thought, all right, we can reverse this one because if it doesn't hold 4, it goes to 2 in no time. But it didn't do it. It reversed today, and you can see that not that oversold from the 10-day moving average, but you know the story here. If it doesn't hold 4, it goes back to 2, so it gets cut in half. So that's virtually 100%. So we'll see how that one hold. The whole determination is going to be what happens there at the 4 level. Resistance, you can see where that is up at 6. Every time it looks like the SQQQ is left for dead, comes roaring back, and you can see these bounces here. This guy, boom, bounce again, and come back, bounce back up again, and this is an example I was talking about how when IV gets sucked out, these things get killed with time decay and IV loss. I've covered that, so I don't need to rehash that. But with the weakness recently in the Qs, this is held in there okay. So at this point in time, there's no real reason to take it off unless the market does turn back to the upside. It actually could catch a pretty decent bid if the market sells off, if it doesn't hold in this area. TNK. Tankers makes you wonder if it's going through the Suez Canal, doesn't it? I don't know if you've seen that fiasco that's going on with that ship that's sideways in the canal and blocking all shipping. So you wonder how that could play into things from a supply standpoint. Our company's going to use that to raise prices as an excuse. If you haven't seen, there's a ship that was going through the Suez Canal. It was really windy. It got turned sideways. It's wedged on both sides of the Suez Canal. And over 50 ships a day, cargo ships, go through there, moving stuff from east to west and west to east, back and forth with the commerce. And there's tons of ships stacked up on either side because none of them can get through now. And so they're talking about all these ships are backed up, full of cargo, full of stuff that people are waiting on. They can't get to their places because they can't pass through there. And they're saying it could be possibly another couple weeks before they're able to float that ship enough to get it turned. So I don't know if that has anything to do with this, but it did weaken, surprised me a bit, but it's holding support here at 14. And that's the key level it needs to hold. If it doesn't hold here, then we lose interest in that one very quickly. But looking at the DMI here, you can see that even with that, the negative directional indicator has not overtaken the positive. The ADX has come down a bit, which you would expect, but it certainly doesn't have the really nice looking setup that it did a week ago. But you know, it's testing that 14 level that could easily hold and turn around and head back to the upside. We'll see. And then MMLP. Also at support where it needs to hold, right there at the 250 level. You could draw the line right there at 250. You could draw it right in the middle here. Regardless, it's in the area of support. And if it doesn't hold here, then this one's down to 1.5 in a very short period of time. This one was on our momentum search multiple days. That's rare that an individual stock will show up multiple days on that search because it is momentum based. So that's where the interest came from here. But now we've gone back to the area of support. So it needs to regather itself and turn back from here. 52% wave 4 correction. So, you know, maybe you just needed the wave 4 first before it goes up to the wave 5. So there's nothing really ugly other than the performance, right? I mean, the chart patterns aren't. We're just still in this mode. I think I covered the market pretty extensively in the beginning with the patterns, with where we are. Frustration of the chop. It's the worst thing that can happen. There was a question that was asked, and I'll reiterate this. I thought I kind of covered this, so I'm not sure when the question was asked, but John, you said somebody had asked about it, and you were going to save it to the end, so I'm just going to go ahead and start with that before we see if anybody has any questions on the alerts within the impulse portfolio. But what is the best way to handle a sideways market? This is the worst of all worlds. This is like stagflation. You know, if you have inflation, you can deal with that, right? There's areas that will still do well. Profits are still good. The consumer bears the cost in inflation. There's things you can do to work out okay in inflation. When you have deflation, certain areas get hit hard, but there's also other areas that do well. But when you're in stagflation, like we were back in the 70s, that means that you have inflation but no growth. So if you have inflation and growth, you can deal with that. But if you have deflation and you have growth, you can still deal with that. But when you have inflation and no growth, it's the worst of all worlds. This chop is the worst. So what do? Well, I mentioned that the one strategy we would look at based on the way we trade is an at-the-money butterfly. Not going to do any of the credit stuff that carries all the risk, because you can do so well. And I used to trade credit spreads. I know credit spreads. I traded them extensively for a very long time. And it just, you do well, and then bam, it's all wiped out, and it happens over and over. It's a cycle that continues to happen over and over and over again. And you never build that lower left to upper right equity curve the way we have over the last 3.5 years. It just doesn't work that way, because when they blow up, they hurt bad. So that's one way that people do it, though. I mean, people still trade credit spreads. People still sell negative options every single day. We're not going to do that. It carries too much risk. You want to do that, you can find that somewhere else. You know, the putting a short strangle on, which is what I talked about before with spreads rather than negative options. That doesn't work because one bad one a year wipes out the whole year. And so we're down to an at-the-money butterfly. And I was looking hard at it. This is years ago when I said, all right, I feel good that I've got the upside and the downside covered as far as directional trading systems. What can I do for the sideways? And it just, the research that I did certainly didn't show it occurring enough And when it did occur, I'm talking about the market going sideways long enough to warrant putting on at the money butterflies. But that's the strategy. Now, there are stocks. I mean, we've seen some. You saw Northrop Grumman, which went sideways for a while. That one would have worked. That was long enough. But the market doesn't do that. Individual stocks can. So the answer is, as far as the market, it's very difficult when you're in a sideways market like this. The best thing to do is, set yourself up for when the market breaks out. And usually if you're right on a directional move, right, you can do well in a very short period of time. We've shown a number of examples of that, of how you can do it. For individual stocks, now you can find patterns that go dead sideways, and you can do at the money butterflies where that churn, it doesn't happen very quickly, but it can tick away at the time decay, and you can gain a little bit. The other way that we're going to be talking about here at Elliott Wave Options in the not too distant future, it's in the future, but not too distant future, is time spreads, calendar spreads, where you sell a short-term option but protect it with the same strike longer term. That is another way that can work well in sideways markets. But we haven't given you any information on that yet. And our mantra is that we don't send out alerts on stuff that we haven't educated you on. We're not going to do that. So that's the situation with sideways markets. It's challenging, but it tends to not happen very often. We're in one now. That's the way it goes. Hadn't happened. I mean, March was a 1 month phenomenon last year. And then we recovered from that in the next month. So this is 2 months now. As I said, this is not the norm. This doesn't happen very often, and it'll pass. We'll move on through this, and we're at the time frame now. Lots of indicators that we're about done with this. And I can sense the pain and frustration from those of you on the other side of this mic camera that it feels like that's getting pretty close to that max pain scenario right now. So that was my comments on the sideways market. So John, if there's any questions on the impulse portfolio, take those, or we can just move into the general Q&A.
No, I think you've touched on all of the questions that we had with regard to the actual impulse strategy. And you also covered off Howard's question. He was asking, would a calendar be another way to trade sideways markets? So it was good to hear from you on that. But there's just as an add-on to that, and this was the question that Kurt was going to ask earlier when he was having the trouble with his microphone, which was, in a sideways market, what about short strangles or iron condors? And could you maybe just contrast those quickly with why you prefer the calendar spreads?
Well, both of them have the extra risk. The iron condor, the short strangle is the one I was talking about, and you might even have heard of this guy, John. There was a guy in Australia that made money for like 20 years doing nothing but short strangles. Again, that 2+ standard deviations, with the rarity of the market moving that far. I forget how many he was doing, but when I was in Australia, I heard about this guy, and a lot of people talked about him. He was famous because he had built this track record time after time after time, year after year of doing these, and then he got blown out after like 20 years of really strong success. So the short strangle is just too much risk, and the iron condor, too much risk for our risk management portfolio. But that one's interesting. That one's a potential to put in there, but it would probably be more in the high value side of things. Looking at an individual case, the ones that I've looked at have they've not qualified from a risk management standpoint, but that's a viable strategy.
Thank you, Rob. And I've got 2 voice questions for you. The first is from Ernst. So Ernst, if you wanted to go ahead and unmute your microphone, you should be able to ask your question to Rob. It's might be having a problem there. What we might do is we will move on, and you've got another voice question from Bruce. So Bruce, if you wanted to try and go ahead and unmute your microphone, you can ask your question to Rob.
Thanks, John. Rob, glad that your voice is doing better.
Thank you. Appreciate that. And this is 3 straight nights of talking too, so I'm pretty impressed.
Yep, it's a miracle. It's a miracle.
Well,
Well, I'm one of those guys that, yes, my account has been obliterated, and I'm to the point where I can't take it anymore. However, I'm going to stick with you, Rob, because yeah, I'm just going to stick with you because I think you're right. I think something's going to happen here where it's going to turn. But my question tonight, it has to do with, you know, these stocks that are $4 or $5, or in the case of MMLP, basically a penny stock. What draws you into even wanting to buy options on these penny stocks?
Yeah, perhaps you may have missed when we first created the momentum scan. This goes back to the whole Reddit, Robinhood stuff, where these guys were creating all of this interest in so I'm going to bring this forward too, but creating all of this interest in the way I found out about it was doing these insider meetings from our own subscribers. I really wasn't even aware of the whole Reddit Robinhood craze that was going on, but our subscribers were asking about all of these low dollar stocks and high momentum stocks. And I'd pull them up and I'm like, never even heard of this company before. And they were the low dollar things. So we created that to find these lower dollar stocks that had good momentum movements occurring, that had the basis of good technicals and fundamentals behind them, but still we're looking for those that were in momentum runs. So the lower dollar stocks that could make big moves, but do it because they had fundamentals behind them. Obviously, it worked well in the beginning. Then we've had this market churn. So they've actually outperformed, other than MMLP. They've outperformed the rest of the stocks that we have on our alerts. But where it came from was, all right, well, let's look at this craze, but let's do it from a more responsible standpoint, other than getting in a chat room or whatever, a thread of, let's stick it to the suits and hit these stocks that have high short values on it and make the shorts run for the hills. And, then a couple institutions got involved with them. They looked like they were having success. And then, now they've been hit really hard too. But that was the basis of it, was our subscribers asking questions about these stocks all the time. And then I, so we're going back a ways, found out about, what was going on. So I said, well, let's create a system. And so we went through and we tested it and said, let's look for these momentum stocks that have good technicals behind them and solid fundamentals, not, just this fly by night to the moon stuff that was going on. And that's where it came from. And it is doing well. And nothing's doing well right now, right? I mean, when the market goes sideways, nothing's moving. But to answer your question, that's where it came from. MMLP has been the dog of the bunch. It was interesting because that one was the one that had shown up multiple times.
Thanks, Rob. And I know we're starting to run into time, but there's a few symbols that Kieran got in really early and a number of people have voted for them. So I thought maybe we could take those 3, if you're okay with that.
Yeah, absolutely. Let's go.
So the first one is SQ.
Oh, wow. That's a good one. Square. And been watching this one as well. And that's why it's interesting, because it's at a major area of support there at 200. And you can see this zigzag that it had here to the downside. We bounced up. We've come back. We're testing support there again at the 200 level. And this one will do well if the market turns around. So when we look at the big Elliott Wave pattern, you can see there's what was so interesting about it, 38% wave 4 correct. That's when I started looking at it.
Craig is also commenting that perhaps that's a head and shoulders forming question mark.
Oh man, you jinxed me on the throat. Is that Bruce? So there's the left shoulder, head, right shoulder. It's almost like a double shoulder here with the left side. Yep, it is potentially a head and shoulders pattern. So how does a head and shoulders pattern work? Well, if the neckline, which is support, and a wave 4 at a major fib level doesn't hold, when a head and shoulders breaks, the way to trade this technically is the downward move from the break of the neckline is the same price movement as the distance from the neck to the top of the head. So however far that is from the neck to the top of the head is the same price movement you look, and it's uncanny how that works. Our subscribers ask fairly regularly about head and shoulders, so I'm sure there's some of you that have seen them. And by the way, this is water, not moonshine. Although it could be warranted right now, right? So that's the head and shoulders. So yeah, it's possible. Not, I mean, head and shoulders like anything else. Nothing works 100% of the time, and it has to break the neckline. So a head and shoulders can form, and then it just breaks down if the stock breaks back to the upside. But I agree that is a head and shoulders. If it doesn't hold the 200 level, then that would be the movement to the downside. We look so pretty significant move lower there.
Thanks,
as
Rob.
well.
And the next code was SHOP. SHOP.
Yeah, Shopify. Looking awfully good till today, wasn't it? A little bit rough yesterday. Now, this one didn't recover with the market, which is not a positive sign, but we'll see how it trades out tomorrow. But, you know, as has been the theme, we've seen this before, right? But as is the theme, again, there's a lot of stocks that are right here in this consolidation area of major support. So close to the launch pad there, maybe a little more volatility than you like, but it's an $1,100 stock. So you know, a little more intraday volatility is warranted. And we're used to that launch pad creating the rocket vertical move to the upside, but the breakdowns can be just as vertical. And if it doesn't hold here, needs confirmation tomorrow. Yesterday doesn't count because it was right at support. So breaking this area here today is concerning, especially with the fact that the market did reverse. But that's the quick move. And there's really nothing stopping it from going back down to 880 if there's follow through tomorrow to the downside on Shopify. That could get ugly quick.
Thanks, Rob.
Again, the main concern would be the fact that it didn't reverse today. Sorry, I didn't mean to interrupt you.
No, I didn't mean to interrupt you either. Apologies. I was going to say the final code is RIOT, RIOT.
And you can see that it's moving nicely to the upside, came back down, and that's one of the biggest flats you'll ever see that formed there, which means that we're about to find out where this is going to go here pretty quickly. Well, that zero line, I clicked on the wrong bar, should have been up there for the flat. That's not the correct spot, which is why it looked so out of whack with the percentages. So here it is. So at the 70% level, chance that could still be a zigzag. to the downside. Maybe we'll see how that plays out, but didn't get that oversold today for the reversal, but it did trade below the 50-day moving average, which held and came back. So the future is bright for this, but that's a fundamental analogy, and that really doesn't matter when the market is weak like this. You know, it's the market becomes technically based, whether or not you're a technical trader or a fundamental trader. If the market breaks down, fundamentals go out the window, and everybody looks at charts to see when the stuff is oversold. But it's at support here at 40. This stock moves a lot intraday, so sitting there at 40, we'll see if it can hold there and turn and run back to 60 in 2 days. But if it doesn't hold 40, then that's a different story. If it doesn't hold 40, then it's back down here to this area where it was a triangle with the breakout, which is right at 20.
Rob,
So
a couple
either,
of people just asking if that's a big triangle in the top formation there.
the big part here.
Yeah, I guess where you drew the zigzag, or sorry, the flat.
It could be forming a large triangle. It's a bit too early. Those bars are too big. Pardon me. So what I mean by that is, I mean, it's certainly looking like it, right? It's lower highs and higher lows. So it could be forming a triangle. These bars here are too big for moving into the point of a triangle, but it could be forming one. So the comments are valid that it could very well be forming one. I think we just need to see maybe a little more of a bounce and some calming down. Whether we get that out of this stock or not, I don't know. It's so volatile, but possibly could be forming a very nice triangle. But you wouldn't want to put a strangle on something like this when those bars are that big. The options would be too expensive, which means that a breakout would be very difficult to make money on a strangle breakout, even with the way we do them with the deltas. It's just too much volatility in the options when you have big intraday bars like that. That just makes it really challenging. Now, if it calms down and we go back and we get stuff that looks like this, like in this triangle, some smaller bars that form in here, then that could be an amazing strangle setup. So you have all this potential movement, and then you get the volatility to calm down and let the options get a little cheaper, then then that could be something really special, but not right now.
Thanks, Rob. Well, I think we might leave it there. We're closing in on 2 hours, so we're well over time, and seems like we can give your voice a rest. So thanks very much for a good session.
Thanks, and thanks everybody, and thanks for attending. Thanks for your attention. Thanks for your questions and comments. I know how you feel. We're there too, and we're all in this together, and it will pass. And so hopefully in the beginning, when I was showing you the market analysis, that's giving you a vision of that light at the end of the tunnel, that things are getting ready to move, if nothing else, because of how low the ADX is. But I think the patterns are showing up as well. And if we do break back to the upside, that vol will come back to the call options at that point in time. So they're killing everybody right now. They're sucking it out of the calls and the puts. And that's other than do risky things by selling options, you wait it out and you recover when it moves. And that's what we'll do. So thanks, everybody. Really appreciate it. Have a great weekend, and we'll be back to talk to you again with Trade Finder Tuesday night. Take care, everybody.